So we've got our trust here, and it's earned some trust income. So it's got a trust distribution. You'll notice there's nothing in here to indicate that it could be a business, because if we've got anything in here associated with a business, we're going to have to deal with a business schedule. In this case, we're dealing purely with investment income and a deduction relating to that investment income. So let's see if we can do this now. Just double check the classifications. Trust distribution, classified, and the bank charges classified. Now, if these bank charges are directly related to that trust distribution, and say that it's a frank distribution, because either it's going to be deductions related to the trust or deductions related to the frank distribution from a trust. Let's say that one. You could use that one and it'll work very much the same. Now let's go over to the form, and we'll add in that form, and now we want to have a look and see what's happening. So the sections that we need, it should actually automatically activate trust, and we don't have the business activated, which is great. We don't need that. And if we have a look over here, you can see that we don't have the business schedule sections activated. This is purely for investment, right? So we've got no expenses until we come in here and we have a look. So the deductions, now we need to add in that worksheet, name of that trust, trust estate income, maybe it is 1,000. Now maybe down here we've got the frank distribution. Let's go 700, and maybe there's a franking credit of 300, and deductions relating to the frank distribution. There's the 5. So let's see now what's happening in here. So this should make sense now, right? So we're starting with the accounting income, net income, which is the 1,000 minus the 5, and the income from the trust, the taxable value, which we said was 700, is getting included, and the accounting trust income is getting excluded. And then the same thing happens over here. The accounting investment Excel value gets excluded as a deduction, and the tax value gets included. So we come down to 695, and if we looked in the beneficiary, we'll see that there's also that $300 to distribute. So the 695 gets distributed and the 300 franking credit gets distributed.